And
Okay.
let me, okay, just hold on. I just recorded just in case you guys want to, go back and check it out. So we're going to start with breakers, right? So a breaker is a candle when the market is trying to change the direction and then it breaks that candle, then it gives, it gives you a notification like, I want to change direction, okay? So at certain points or different points in the chart, when you get the breaker there, it kind of signifies it wants to go in a direction. So let's say we have, this is an uptrend going up like that. And then we have this is in an uptrend, you'll be looking for red candles. So red candles will be the breaker in an uptrend. And the downtrend is going to be the green candle. So uptrend, red candle, downtrend, blue candle. Okay. Don't know how that to draw B very well. Okay. All right. So in an uptrend, we're looking for a red candle. In a downtrend, we're looking for the green candles or the blue candles. So if you had a red candle here, let's just use a circle, and then the price breaks that, yeah, the candle closes, full-bodied candle closes below this red candle here, that signifies a breaker. So it's a break in the market structure. So now I'm going to just go and use a regular candle so we can understand. Let's say EURUSD. I can find a chart that is clean. All right, so see here, this is just the most recent price action for EURUSD. You see we had this low right here. Yeah, and this low had this green candle just below that low. So the last green candle to the low or the high, that's a breaker candle. It's a potential breaker candle until the market breaks it. So this is the green candle to the low. So once a candle closes right above that wick like this, the full body breaks it. That is an indication that there's a breaker in the marketplace. So once this has broken now, it's now signifying to us that, okay, the market is going to the upside. So this candle becomes your breaker. Then this last candle with the low becomes your demand zone or a source, right? So let me unmute you guys now, and you can ask if you understand this basic thing now that I just explained. If you can ask any question, unmute yourself and ask a question. Right?
Yeah, I would say just go on and
Okay.
we see and we'll maintain that your flow should go so that if we, like you said, if we have a question, I will use the chat.
Right. Okay.
Yeah, it'll be
All
better
right.
that way.
All right. Thanks.
Otherwise, it's going to take
Gonna
some
take
time.
time. Yeah.
Yeah.
Okay. Let's just do the crash.
Yes.
All right. So, like I said again, when you're in a downtrend, yeah, and now you've made this low right here, that's the low. Once a candle breaks above that last green candle or blue candle, bullish candle to the low, that is signifying a breaker. If this candle that breaks it, breaks even this week, so you see this week here, the left week to this breaker candle, yeah, if it breaks both of them like this, that's even a stronger break in market structure. So I like to say this one, yeah, but this two right here signifies that it has really broken the structure. So it has taken out this high and made a newer high. If we go to your 15 minutes, you'll see how this price action looks like. So this is why we have trading view, so we can always, there are easier ways to go to the right. So you can see here that this was a W to the upside, and it had taken out this high, It has taken out this high, has taken out this high, right? So that's 3 highs already gone. Oops, what's happening now? Yeah. And then this high right here has been taken out. So we've had this push to the upside, take out all these highs. If you're doing your, what's the word, retail mind, whatever, this is your trend line. And he has broken it also. So it's signifying that it's a very bullish move that's about to happen. So it's telling you that it is bullish. Okay. So that is what we call breakers. So when we have a breaker, we then have a source. And that source now signifies your demand supply. I'll take another example. You see how we were falling down here? We're falling in this down structure. We then had this low form right around here. See? So assuming you didn't know all this was happening, let's just look at it like this. All this was falling, and then we made a low. You see, this is your last bullish candle to the low. Price has now broken that right there with this candle. I see it broke this bullish candle and broke all the wicks, the one next to it, right and left, broke everything. That was not the sign that it was going bullish. So this would continue until we now make another high, and then it takes it out. So you see, we made a high right here. Made that high. And then we now had this red candle to the high. So this will now become our potential breaker. So going up, so this was supposed to start going to the upside, but we made a high and then price broke it with this candle and took it out right there. So this would have signified to us that, okay, it's now bearish, and we continued right down there. So this would have been what the retail support turn resistance kind of thing, right? So once you've broken it like this, yeah, this blue candle now becomes your supply or source zone. So however name you want to call it, but if you don't understand how supply or demand zones are formed, then you can't be able to identify a good supply or demand zone. So this became a supply zone, and price has not gotten there yet, but at some point price will get there and react. So supply zones are where sellers are, demand zones are where buyers are. So now we had this break right here. This now becomes our demand zone. See how they came, pulled and went up. So if you want to look at it, you can look at a demand zone as a demand, a source, and a support system. All of them are kind of relative. Now I'll show you why I said so. Let me see, I'm looking for the chat I was having with someone today. Yep. Can you see this picture here? Yeah. See how here, this is an indicator I put in. A friend of mine, Leaks, just gave it to me yesterday. This identifies a break in market structure. So there was a bullish candle to the upside and it broke it. And you can see here, even this one, this is a low, took it out. And once that happens, what does it create? It creates the supply zone, right? When there's a break in market structure. And this now became a resistance or supply zone. Here too, there was a break in the market structure, more or less at this zone here. This is the low, and this is a major break here. If you still want to use this candle, that's still fine because it's quite, if you zoom in, maybe there's a little bit of pips below that. So if it broke it with this one, there's a break in market structure there. But that made a low. And you still look at this as a support zone. And it's also a demand zone. So in essence, what I'm just trying to teach is how you can understand what creates a supply and a demand zone. If you can understand that price action mathematics, if I may put it like that, then you'll be able to understand supply and demand very well. And you can easily look at the charts and identify what's happening. I give a last example. So this is Euro USD again. This is a low, this is a high. I like putting the line so that you see it very well. So we've created this low right here. What is the last bullish candle to that low? Remember, when you're going in the down direction, you're looking for the last bullish candle to the low. So this bullish candle is here and price broke it there. We zoom in, you'll see that. See, so price broke this candle. Now, as I told you, the best way also would be when it breaks this one. So it broke it right here. But the first break was here. And you saw it broke with this candle, and then this one was more like a retest into the zone, which now became what? A support. So a resistance broke the resistance, turned support, bounced, went up. So all those price action forms support, resistance, supply, demand, source, however you want to look at it, just know when price gets to that zone, they react. Now, we have this up here. That's a high that has been made. Although there was some consolidation, but that high, you can see that this is the last red candle to the high. And mind you, you have to note that when it makes a high, the candle that we're talking about, the body of the candle should have closed above the wick or below the potential breaker. Like here, this is a complete breaker, potential breaker candle, because this low, the candle close is above this one. If it was like this, I wouldn't call this, if this was a green candle or whatever, I wouldn't call it a breaker, a potential breaker, because they are more or less on the same level. But this one closed, then we have the low which closed below it. Yeah. Honestly, I hope I'm making sense though. So this candle is a down candle. It closed here, but we have this high, and this high closed above this last red candle to the upside. Price has now broken it, and it broke it with this candle. Took out this wick, took out this wick. So price became bullish. Bearish, and started falling. Along the way, price broke. This one broke here. See the last bullish candle to the low, it broke up, became bullish for a while. This one at some point was a source right here. How do I know that? If I continue the story from here, we had a breaker, we had a supply zone, we fell, we made this low right here. Yeah, but you see this was the last order block to this one. As you see, this one here, I wouldn't consider it per se an order block, because this candle, you see this is the low, but the candle low is higher than this. This low is here, and this one is high up there. If you still want to consider it a breaker candle, you could potentially, because it broke that, but this is the major high that needs to be broken, because that's the one that is low close below that. And then also it used the wick, and then here. So the story I'm trying to say is there was a break to the upside here, but then this high was formed, and then we had this last red candle to the upside, and we broke it here, making this your supply zone. And that's how this one reacted from it. In any case, so this is how supply, demand, is formed. That's all I'm trying to explain. So now for the first 2 weeks of my trading that I've been doing and consistently just closing our 10 pounds or dollars and $20 or wherever, is this. You have a supply demand indicator, if you want to say. This is a scanner, and all I do is every day I just go to my scanner and look for the supply demand zones. I'll take, for example, the USD Swiss that USD JPY that I just posted today. I'm going to show that. So this is it. Chart. So if we look at this now, it's showing me that here is a weekly demand zone to buy. Now the funny thing is, this candle did not actually touch it, but it touched one of the indicators that I'm using to that show me the supply and demand levels. So this is a weekly demand zone, and I was expecting price to at least pierce it and go up. So I have 2 or 3 indicators here. I'm using the supply demand dashboard, and then I'm using this one, MTF order block. Pretty sure it's free online, and that GMCOB. I like to use all of them because over time I've been using them and I'm used to them. So at some point I realized, or I noticed this week, that the same setups I'm looking for with this supply demand pro, this GMCOB or the MTF is also, price is also reacting off those levels. So once it's just getting close, those that know about the market reversal alerts EA, I just go to the EA, load it up, and set if I want to buy long or sell short, and I put how I want to risk it. So I put either 0.25%, which I like to use, or 0.5% of my account, and then or you use a lot size, and you set it in there, and it takes the trade. I think it has opened another trade. And it takes a trade for you. So that's essentially how. Oh boy, that's close that. Thank you very much. That has taken out my $3. So yeah, it essentially works that way. That's how I've been setting it up. So I'll look at, ADUSD, like now ADUSD, we have this supply zone right here. It didn't actually get very close to it, but it reacted off there. Let's see, New Zealand USD. This is on the daily. So now I'm actually targeting to look for this for a buy. And you can see that this is the MTF. Let me click on it to see the bullish order block. So this is the MTF indicator. The MTF indicator is also showing us that that is a demand zone. So once I'm just seeing it getting close like that, usually I start even setting like 0.01, just so that when it activates and I see it, I'm like, okay, and I'll go to the chart and look at it. Now, pound USD, this is just one of the tools I'm using. Pound USD was supposed to get into the zone. But like I said, if you understand how the demand and supply zones are made, you can literally trade it even without using this one. So I know that this is a high right there, and this is our breaker. So we broke it like that with this candle. So this green candle, the highest high with that X, is our supply zone. And that is the line that that indicator drew. So as soon as the EA the stuff was getting there, the price was getting there, I loaded the EA to take a trade on the 15 minutes. And now the 15 minutes would be, What is it now? Okay, so more or less like that. So let's look at this. So now this is the high right there, those highs. So this high, usually what price will start like this, right? You wouldn't see all this part. So we made this high and price did that, went up and then broke this level right here. So that would have been your break in market structure at that zone. And then is to take your trade. The EA will take the trade based off, the risk that you put in. And then we had a retest of the supposed source, which is this one here. The candle with the highest high, I think it should be this one. And then it went retested, came right back. It did not actually go too bad. And then it went back down. So now what happened was on the H1, we had a break of market structure, which is here. So we had this high, then this was the other block to the high, and it broke with here. So it went right back to test the source, which is the supply zone. And that's when the sell now happened. I think I should do something here because this is kind of crazy. So yeah, so when we now had that retest, we now had yet another break of market structure. So this indicator or the EA shows the break of market structure. So if you don't know, break of market structure very well, this will help you essentially. And I would say honestly, the indicators I had then, they actually helped to teach me. So this is also one I use, FXOB. You guys have probably seen me posting charts with it. It always draws the source and the break in market structures then. And then it can always go back to the history or how many bars in the past and always check for the source and supply, which are all demand and supply zones. So like here now, you can see UJ, this is why I bought UJ, because I saw there was a break of market structure here. This is the last green candle to this low. It broke up and then went all the way down into the source. Now, if you're looking at this, right, this red candle here is the one I would look at to pick. So once it's getting in here and it does that M15, that's fine. You can take the trade. And if it does the M15 breaking market structure, you take the trade. And more or less the way I'm looking at this, if you do know ICT Fibonacci levels, you'll see that this is an OTE trade. You see right there, it's an OTE trade. So I'm expecting it to really actually, go up, because what I also noticed from the past, when we have a H4 break of market structure within a daily supply or demand zone, it's quite a strong move that happens. So, and that's what has happened. This is the daily source or the daily demand zone. And then we've broken on the H4. So only them know what will happen Monday, but it's a trade to look out for. So if you actually did not know or understand what the market is doing, let's say you're a novice and you're just starting out or wherever, I would just say, okay, you know what, get your supply demand dashboard. Yeah, all you got to do is find the zones where price is getting to. Once price is getting there, set your EA, even if it's 0.02. Which EA? Oh, market reversal alert EA. So yeah, so once you, like here now, this is a demand zone, and I mean, for me this is quite clear that it's going to react here, because You see this gap, there's a gap right here. Usually when there's a gap and a source, price reacts. So that gap, and then there's another gap here again. So price would most certainly come back here. And now, please tell me that you have now realized that there is a break of market structure here. So this is a H4, and this is your high, right? This is the last bearish candle to the high, and price has now broken it. Yeah, 10 minutes remaining on our Zoom. So price has now broken that. And even if you make it like a line chart, you can see that as an M. So normally when you have ICT patterns, you have the M, then you have the retest, and then you have the continuation trade. So essentially it's just pulling back, and you can actually continue the trade on Monday. So it will pull back to a specific level and then break structure again to the downside and continue. So here what happens, this is our supply demand, our support resistance zone. So you can actually come here, retest it, and just continue down. So this is the simplest way I think I can break it down. If you have any other supply demand tool that you like, that you're used to, you could do the same thing. To just use that, use the EA or use your manual trading. You don't need to use the EA. So far as you understand when there's a breaking market structure at the zone, take it. And I have another template that I use, which I set up this week. So in the past, I remember that I always used these pivot systems because they were pretty accurate. I use it as 0. And when a let's say a pattern happens, it's usually at the support or resistance levels. And then what I'm targeting is the middle. So this is the PP. I don't know if you can say the daily pivot. So that's the midline, the mid-range. So you can target the mid-range, resistance 1, resistance 2, and resistance 3 as your TPs. Then the EA has all these ADR levels. You can see that here it actually hits the ADR level and the support broke it and then went up. If we look at pound, okay, I think it's frozen now. But I think pound had the same setup too. Okay. No, the stuff is always connected and canceling. So right. I think yes. Yep. Okay, so it's coming back now. Okay, so you see, this was a resistance. We had a break of market structure there, retest, and it has hit support 1 and support 2, and those are your take profit levels. It's certainly coming back here because it has to fill up that gap here, and then it will now react at this zone there. So you can see how that if we zoom out, you see this is a H4 demand zone, H1 demand zone. We have our GMC OB right there. We have a support right there. We have low ADR. Everything is just adding up to make the thing a system. It's crazy how when you look at so many things and you see it adding up like that, it's like different indicators see different things, but they're all painting different parts of the picture. And then you put the puzzle together and it makes the whole picture big. So yeah, I don't know how many minutes we have left, but if you want to rejoin, well, we have 6 minutes left, okay? So let me unmute you guys and so you can unmute yourself and give your comments. Yeah, Alex, I'll send it to you at post. Certainly recording it for you. And then you ask. Yeah, you can unmute yourself.